When looking at the markets today, we need to look at it as the glass is half full and look at the opportunity that awaits us here as silver's price takes a pretty big beating today, a plunge under 2%. Let's talk about what happened and what we should look out for in the coming weeks. Let's explore! Silver's price is down. It is plunged under over 2% today, and that is the marker where I say that silver price has plunged. Now, that's a personal opinion, but a 2% move in one day is pretty big, one direction or another. And so it's down 64 cents moments before the markets close as I look at these numbers here. That brings it to $31.31. It was down to $31.15 earlier in the day. Gold also got a hit pretty hard. It is down 1.36% to down $39 today to $2,878. Platinum and palladium also got hit even harder than silver today. That's measured in dollars, and one of the reasons for that is, well, there's a lot happening in terms of the sentiment for the economy in general, and that is the foundation for what drives prices in terms of things like the dollar index. And right now, the dollar index is sitting pretty right now. It's up slightly. It's up almost just over 3/4 of a percentage point to 107.29. So therefore, it's hitting all the precious metals, save for rhodium. Rhodium is actually up today, but notwithstanding, there's a lot of feelings about the economy and that we are maybe headed for, who knows, many people feel we could still see a recession, but so far, according to the latest numbers, things are looking fairly good, at least for now. So that is one of the reasons why I use the word might in the title. It might be a good thing. I don't know about you, but I prefer gold and silver prices to remain low in the economy to do well, no matter who is in office, by the way. Kitco is reporting that the gold market is trading near its session highs, struggling to find any bullish traction following data showing that the U.S. economy continues to expand, albeit at a slower pace. So that's what that's about. Summit Metals is the sponsor of the channel, and opportunities like this that come along, well, that gives you a chance to be able to buy silver at a lower price. Summit Metals has very competitive pricing, so check them out at summitmetals.com. The second reading of the U.S. gross domestic product showed the economy growing by 2.3% in the final quarter of 2024, according to the Bureau of Economic Analysis announced on Thursday. The data was unchanged from the first reading and in line with economists' expectations. However, the report also noted that inflation pressures continue to rise. The preliminary gross domestic product price index rose 2.4%, up sharply from the initial estimate of 2.2%. Economists were expecting to see an unchanged reading. At the same time, core PCE for the quarter, which strips out goods and energy prices, increased 2.7%. Economists were expecting to see an increase of 2.5%. So there are mixed reaction here. And this is why I caution you as the prices move down today. Well, the interpretation of the data the next day by the markets could send us in the opposite direction, where the silver could recover. You know, and profit taking is also playing a role here with what's going on, which is why it's a good idea to consider, you know, if you're going to make a purchase, these big dips like this are the perfect time to do it. But only do so when your budget allows. Don't ever spend based off of a fear of missing out on a dip. You know, if you can't afford to make a purchase, I definitely would not do it. The gold market was already seeing some solid selling pressure ahead of the report, though, and the trend hasn't shifted away from the initial reaction. Spot gold again was down today. In fact, it was at the time of the writing of this article was at $2,884. It's at $2,878 now. It did get as low as $2,865. We shall see. But these numbers, again, could turn around very quickly. We just don't know. Inflation pressures continue to rise. The report notes that consumers continue to spend, with consumption rising 4.2% in the fourth quarter, unchanged from the initial estimate. And that is after ignoring the report that this article didn't refer to, but there's a report that Walmart is seeing lackluster sales as of late. They're doing good, they're still growing, but Walmart is a big indicator in terms of what's going on in the markets because most people shop there. Now, according to some economists, this GDP data will put further pressure on the Federal Reserve as it tries to support a balance between the labor market and inflation. The central bank has been clear that it is in no hurry to raise interest rates. As inflation risks start to rise, this could have a short-term impact on gold, as the Federal Reserve's neutral stance could support the U.S. dollar. The Fed Watch tool, which is one of the places we go to get an indication of what people are thinking from this polling, essentially, has, again, right now at the next meeting, which is coming up on the 19th of March, sitting at a solid 95.5% chance that the Federal Reserve is going to leave rates unchanged. That's actually down a little bit. I think it was like 97% last time I checked, with only a 4.5% of those participants think they're going to lower it a quarter point. No one believes they're going to raise it at all, but nonetheless, it is overwhelming the odds that they're going to leave rates unchanged, and I agree completely with the 95.5%. They're going to leave them right where they're at. They're not going to move them one way, shape, or another. Now, based off of my video from this morning where I talked about potentially bad news for the silver market, it was not related to price, but it was related to the gold to silver ratio, or the silver to gold ratio, which is a more accurate name for it. And it has now increased to 92.17. We're on the path to 100 to 1. But again, remember, that is just how these metals are so different in many ways, even though they share a lot of the same properties as monetary metals, at least historically, and also hedges against inflation. But nonetheless, it does take a little bit more to realize that with silver than gold over the course of time. In a way, silver or gold has been acting more like an investment strategy for most folks that have been able to profit fairly substantially. Not nearly to the amount that some Bitcoiners have in recent years, but nonetheless, a stable store of value that has steadily increased and broken records multiple times last year and this year here in 2025. So there is something to be said for that, but we should not be surprised if we see that number increase, the gold to silver ratio or the silver to gold ratio. And we're going to track it here for sure, but just to kind of give an example and really, in a sense, to kind of encourage silver stackers out there that, the gold to silver ratio, though it does carry some weight and importance, it just goes to show you that when it's all said and done, silver really can only be compared with itself and in comparison to the dollar over the long course of time. The dollar is a losing proposition in terms of its value. Obviously, it is needed in order to buy silver and everything else. It is the ultimate currency. Cash is king, so they say. But nonetheless, it is losing value, and by design of the Federal Reserve, at least 2% per year, but we know it's more than that now, obviously. And silver, though, over the long course of time, has maintained its value. And of course, you can pick any certain date for any kind of commodity or strategy out there, and it's going to give you a variety of different outputs. In other words, you can make silver look like a horrible investment, a losing proposition all the way around, or a winning one. But when it's all said and done, it's about the law of averages. And it must be personal for you. Whenever you're stacking your silver, whenever you're buying it, you take into account the premiums when you buy it that you have to fork over, and the loss of those premiums when you go to sell, as well as, especially in today's market, although I think that may be changing somewhat, loss of even some of the spot price. Many places are giving you back of spot because they have a glut of silver in their possession. But some of that dynamic is changing, and I think that as gold continues to climb, I think people will focus more on silver. It is the cheaper alternative, and it's so low compared to gold that is going to be one of the motivators for people to get in on silver. However, that should not be your sole motivation for stacking it. But nonetheless, here we are, another market report, a big drop today. Tomorrow could be another day. We'll see what happens. But we're going to track this thing here. In fact, right now, silver's now down 1.98%, down 63 cents. So there's some resistance there. We'll see. We'll see what happens. But will it fall below $31 an ounce tomorrow? We'll find out. Stay tuned. Let me know what your thoughts are in the comments section down below. Hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate. That means press that thumbs up button, share this video on multiple social media platforms, comment, and subscribe.